Alrighty guys, what is going up? So welcome back to building a $100,000 dividend portfolio. We're going to be giving you guys an update on my dividend portfolio that I invest anywhere from $1,000 to $2,000 per month into. This is episode 2 and we're going to be building this whether it takes me a year, whether it takes me 10 years. We're going to be hitting that $100,000 mark in this account here. So I hope you guys enjoy it. If you get anything in value, hit that like button and subscribe. If you have any questions or concerns, go ahead and ask them in the comments. And if you guys want to learn more about investing in the stock market, I do have a course and you guys can use promo code dividends to get 50% off. So at least check it out. We talk about fundamental analysis, technical, we talk about it all, so at least check it out. First link down below. So now to jump into it, roll the intro. Let's go. Come on. So now, what is my goal with this account? Well, my goal is very simple. It's nothing too complicated. 1, we want to cross over that $100,000 mark. 2, we want a dividend yield at around 3%, and that's going to bring me a passive income of around $3,000 per year or $250 per month. Obviously, that could be used for a phone bill, car insurance, or whatever, but me starting off and being only 21, we're really going to be just reinvesting all those dividends back into this account and maybe hit $1 million hopefully someday. But obviously one of the main reasons why is because if you reinvest your dividends, you make so much more money. Look at the chart right here. You guys can clearly see the difference between reinvesting your dividend and not. So always, especially being young, reinvest your dividends. It'll pay off in the long term. Now with this account, it's just a standard broker's account. It's nothing special, no special IRAs or anything like that. It's just a standard broker's account that I am using M1 Finance for, because M1 Finance, in my opinion, is a fantastic broker for dividends. It offers DRIP, it offers what you call pie investing, so you can diversify very easy, and you only need a minimum account balance of $100. So it's obviously designed for beginners and, in my opinion, long-term investors and dividend growers. So obviously that's why I love it, and if you guys want to check it out, I have a link down below so you guys can get like $10. Check it out. So now breaking down last month. So last month really we hit $2,000 in this account, and this month we hit $4,500. And with my other accounts we're almost at $6,000. And then I have a swing trading account that's at like 35. So obviously this one is the one that we're focusing on. None of the others, only the dividend account, because those other ones have definitely gotten ramped up because of Tesla, because I did invest in Tesla, but this one is only dividends and dividends only. So right now we did have a passive income stream of around $15, and that's passive income. That's not lifting a finger to get. That's all from dividends. And in my opinion, I think that's fantastic. That's like a free gym membership. So what are the top holdings that I do have in this account right now? Starting off with number 1, I invest 40% non-negotiable into the S&P 500. For those of you that don't know what the S&P 500 is, imagine the top 500 companies in an index. So all merged together, weighted by market cap. Definitely the number 1 is Apple, and you guys can see all the other ones. And what's cool is Tesla just got put into this, so it's going to be a very strong index to invest in. But obviously 40% non-negotiable. The reason why is because this has been around for over 90 years and it gets an average return of around 9.8%. So this is something I don't have to really worry about. I don't have to check the day-to-day price. And as a long-term investor, I understand this is going to go up in value even more. And the beauty of it is as it falls, all you do is just average your price down as you know this ETF becomes undervalued. But the ticker for this is SPY. It's fantastic, low expense ratio, and I would highly recommend it. Now the dividend yield for this is just over $5 per share, so this is pretty strong, or a yield at around 1.6%. So it's nothing too bad, obviously something I really don't have to worry about. Now the second holding that I do have in this account is ticker symbol VIG. This is Vanguard's High Dividend Appreciation ETF. So they have a ton of awesome holdings that are mostly either dividend kings or dividend aristocrats. For those of you that don't know the difference between the two, well, dividend kings are companies that have been paying a dividend for more than 50 years. So these are companies you really can count on cash flow coming in, and dividend aristocrats are companies that have been paying dividends for 25 years. So both of them are fantastic. Some of the top holdings in this account is Johnson & Johnson. Johnson, 3M, Microsoft, and a lot of those other ones here. Beautiful for long-term growth, very, very low expense ratio, and it's highly recommended. And I do invest roughly 10% of my money, automatic, non-negotiable, into this. Now, the third holding that I do have is Home Depot. I know a lot of you guys don't like Home Depot, but me personally, I think you get a solid dividend of just over $5 per year. It's fantastic for the long term. It's outperformed all the major indexes, Dow Jones, NASDAQ, and the S&P 500, and I still think the growth is very, very strong as home remodeling honestly becomes more and more dependable, and people are getting more and more attracted to it each year, so that's great. Now, the fourth holding that I do have is ticker symbol QQQ. This is a tech ETF. This has companies anywhere from Amazon, Apple, Microsoft, and a lot of the other very, very strong tech companies. This is going to be one of these ETFs that are going to be really boosting up this portfolio. My prediction is getting a growth of anywhere from 12 to 15% annually, and it does have a little smaller dividend, but I'm hoping the growth really pushes up this portfolio here. And now the fifth holding that I do have in this account is Costco. Costco does pay a solid dividend. It has in the past paid a special dividend just like it did last December, and that was like $7 per share, and that was a beautiful dividend that I did get from this. Now, I do invest roughly 4% of my money into this. I do think that Costco is rated one of the best places to work, and when you have happy employees, most of the time you will have a solid revenue because employees come ready to work, happy that they have this solid job. It's great investment. So I do think Costco is a perfect dividend stock right now. And they've slowly been increasing their dividends year after year, so that's great. Now, I do have over like 32 holdings in this portfolio, so obviously you guys can check them out right here, or I will post a link down below so you guys can check out the full portfolio. All of the percentages will be there, and you guys could literally copy it trade for trade. So I'll make sure that's down below, but obviously guys, this is a long-term portfolio. This is nothing that I'm gonna hit within the next couple of months. I completely understand this could probably take me around 3 to 4 years to do, and my personal opinion, I think that this is a fun challenge. And also, we're going to be doing something special. Once a week, I'm going to be going to the community center on YouTube, on my community center, and I'm going to be seeing what I should invest in, and you guys are going to help me out. And every week, I will put 1% into a certain stock or ETF that you guys would recommend. So make sure you guys like, so you guys can stay updated, subscribe so you guys can stay updated on this challenge. I'm super excited. And obviously, if you're a beginner, let me know down below. I'd love to get your opinion on some stuff. So I hope you guys enjoyed the episode, and if you did, hit the like button. Don't forget to check out my course, and we'll see you guys tomorrow in another episode. Remember to stay happy, stay positive, and stay safe out there. Take care, everyone. Bam!